Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 22nd of September, 2016. Thanks for joining me on this Trader Bite. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. There's discussion of an oil output freeze. We have a gap up in oil trading at 46.20. Oil is up another 1.92%. Trading November oil. And overall, the market stance is that risk capital risk is moving to on, or the capital is moving towards risk. Pretty much everything is green across the board except for the U.S. dollar and the Japanese yen. The safety pieces, including gold. Gold is up 0.7%, trading $1,340.70. The Euro stocks and the DAX leading the bunch, up 2.36% and 2.17% for the DAX. So pretty strong. And then from yesterday's close, the S&P is up 9.25 points this morning. So the market is bullish this morning, pretty strong, with a strong overnight session following yesterday's FOMC announcement. That's really what's pushing us around. Jobless claims came in much lower than expected, 252,000 versus 261. That helps give us a boost. But also, the ECB published an economic bulletin saying that moderate global growth continued in the first half of 2016, raised 2016 GDP from 1.6% to 1.7%, gave us a pop at about 4 a.m. Chicago time in the overnight session. And of course, a slew of central banks released their decisions: Indonesia, Philippines, Norway, the Reserve Bank of New Zealand, and so on. So a fair amount of fundamental information coming across. The market's taking it as bullish. And of course, the July FHFA housing price index came in strong at 0.5% versus 0.3% just now. Looking at what we're expecting going forward, we're looking for existing home sales in the U.S. at 9 Central, 10 Eastern for August. The consensus figure is 5.45 million. And then the EI natural gas at 9:30 Central, 10:30 Eastern. And then we're looking for Kansas City Fed, which is a low importance figure, at 10 Central, 11 Eastern for September, expecting -3. As far as speakers, there's a slew of them. As I said, the ECB published its economic bulletin and its allotment under TLTRO. But going forward, at 8:30 Central, 9:30 Eastern, we have the BOE Bank of England speaker Cunliffe. At 9 Central, 10 Eastern, we have ECB speaker Lautenschlager. And then at 12 Central, 1 Eastern, we have Fed speaker Lockhart. At the same time, we have BOE speaker Forbes. And then at 12:10, 1:10 Eastern, 10 minutes after Forbes, we have BOE speaker Carney. So there's just a parade of speakers today. Let's take a look at what we had yesterday for a plan. Here's what was here's what we're looking for yesterday. Essentially, the market's expected to test. At the time of the Trader Bite, it was trading at 37.50, but by the time the market opened, it actually was higher, trading at about 21.39, up here on the edge of the value area high. It opened just inside value area high, and it followed the same pattern. We had an open auction, tested up, found sellers, came back in, tested, came back down to the prior day's point of control, and then came back also down to test value low like we saw here in Hypo 1. So Hypo 1 was on point yesterday. Not that I'm tooting my own horn, just stating a fact. Hypo 1 was on point, and then of course the expectation is for it to balance through to the FOMC, and I drew a line there. At the same time, though, the secondary expectation was for the market to rotate up and to finally, and you probably, if you've watched the last few Trader Bites, you've probably noticed that I've been pushing this idea that we're likely to push back up into the 2152 area to the next balance zone once we break through this a highly important low volume node, composite low volume node at 43 or so. And what the yesterday's trade brought was both. So if you follow yesterday's trading, wow, this is quite noisy. Let's move to 4-tick Renko here to just consolidate this chart a little bit. Here we go. So as I said here, we opened right inside of value high. We push out above the prior day's range. We test, we find our sellers, rotate back through, come down to the point of control, consolidate at the point of control, break through, get down to the value low. Remember, I told you value low yesterday was a valid, or the value area was valid, a completely Gaussian balanced profile the day before. We bounce a value low, bounce around a little bit. We had the key opportunities yesterday right there at the mid VWAP and OS low as well as IB low, and looked for a rotation there. It gave us a 7.25 point rotation. It was worth about 5 points. And then we wait till the FOMC. The FOMC comes in right in here, and then the market does wave 1 up, wave 2 down, and then it does this wave 3 that actually fails back to the scene of the crime right here, and then wave 3 continues on into the close and rallies. So we ended up pushing into that 53 area, that key area, 52, 53 area that I just talked about. So up to the FOMC, we had the open auction push up, push down, and then this, which is the same as what I drew on Hypo 1 here, right there. These are both the same. And then once the FOMC came in, we had a break higher, which played out Hypo 2. So this is one of those days where it did both. And we ended up pushing through and leaving a low volume node all the way through here from the neckline at 2144, which is the low volume composite low volume node, all the way up through to the point of control that we closed. Very interesting trade. And then to make matters even more bullish, the overnight session essentially pulled back a little bit. We closed right up here at 56.25. We pulled back just a hair. Traded the heck out of this area during the Asian session. And then once Europe opened, which was somewhere in here, we started to rally up. The ECB bulletin came in and pushed us even further. And we've been rallying and pushing that high up to this point. 2166.50 is the overnight high. 65.50 is what we're trading. A double distribution profile in the overnight session. Decent volume, nothing extraordinary, but decent volume. The key area to watch for this morning is right here in the 58.50 area. As long as we stay above this, we're likely to traverse or cross our big gap zone that we left behind. So let's step back and see the big picture for a minute. Here's the weekly profile. If you recall, a couple weeks ago, we traded up here as part of our balance that we've been stuck in for a while, and then we gapped down and left this gap zone and just ran straight down on a Friday. And then the Monday came in and we opened below. We tested below and we rallied back up 45 points. Actually, it's right here, this yellow or this gold day right here. That was the Monday. And since then, we've been trading inside of this until yesterday, which is red in this week's profile. Until yesterday, it broke that consolidation triangle and has broken higher. We are back to one-time framing up On the weekly, we're back to one-time framing up. Last week we had a low. This week we have a higher low. We have 1 day left, and we broke the high. And so this is threatening to shorts. If you are short, you'll want to look at hedging that with options or reducing your exposure, in my opinion. And this morning we're pushing deep into this. We're trading at 2166. We're pushing deep into this gap zone and filling it back in. The next target up becomes 74.75. 74.75 is the key target up. It's the point of control of the prior week and the most recent point of control before the gap down. Okay, it's a lot to digest here. But what we have is a market that's consolidated over the last week and a half or so, and then yesterday it finally broke out away from the base that we've had, that we've been talking about. The base has been down here, and the market is breaking higher, and it finished essentially at its highs. The expectation was for a continuation higher, and here's the gap zone right there. And we are trading in the upper end of the gap zone. The gap mid is 63.50. The gap high, the top of the gap, is at 69 and a quarter, 69 and a quarter or so. And so we're pushing right back into this point of control here, this black line, the 72.75. That becomes our target for this morning. Okay, so that's how things are shaping up. As far as what I'm expecting for today, this is going to be hard to draw on because we have this kind of gray color here, but we're likely to open in this region here. I expect that we will continue, we're likely to continue pushing this high, this overnight high. But the expectation is for the market to open, likely to be an open auction. I'm looking for it to actually continue higher, push into the point of control above, find its sellers, attempt even higher, and then start to turn around, and then finally fail to break through, and then likely to push back through and down into the mid of yesterday, or that LVN zone from the overnight session. That's the expectation. I expect after yesterday's rally that the market is likely to rest and to sit in the middle. That's the primary hypothesis for today. I do expect continued buying, but eventually we're likely to balance out, and we're likely to have a profit taking. Those who are in the money based on yesterday's trading and the overnight session, the Globex session, are likely to balance their positions out and hedge their exposure at some point today. So that's likely to cause this selling. Again, it's not I don't have a crystal ball, but that's the normal nature of the auction after a big rally day like yesterday. The secondary hypothesis is for an open auction, an attempt lower early, which actually strengthens the buy position or the long position. So a push lower early will likely give a good base for buyers to start pushing through, and then I'm looking for it to go even further up if it does that. So I'm looking at a push down into the 2158 area, and then a rotation back up through the 2175, 2172, 2175 area. The tertiary hypothesis, or the third hypothesis, is likely to be an open auction, an open drive early, since we are out of balance, out of range with a gap below, an open drive early that later fails and then starts to bring us back through and back into balance. The expectation is it would likely push all the way down into this 4650 area before it stabilizes and starts to move back out. That's hypo number 3. This is also a likely hypo. The catch with hypo 3 is that we are pushing into we're not pushing into new all-time high territory. We're pushing into old stomping grounds. So as I pull this in, you can see that we've been up here before. You know, we've traded up here through the whole month of August and a portion of September. This is not new ground here. So it's more likely that the market would open in an open auction, a base, push higher, and then stay in the middle of this gap and start filling in this gap area today. So that's the primary expectation. Anyway, I won't extend it farther than that. Uh, hopefully you're maintaining your discipline through this and picking your spots. There are opportunities here. The market is auctioning a little bit better than it did over the summer. And so just be measured in your response to any particular move, and make sure that you're not trading out of emotion. It's that's your nemesis, is to put on positions or take off positions based on how you feel. Avoid reacting to how you feel. You have that choice to not respond to how you feel, but instead to assess the market for what it's telling you. Trade what you see, not what you feel. It's easier said than done, but it's something that we're here to practice every day. Good luck, and I'll catch you tomorrow. Stage 5 traders, we have our walkthrough in the notes today on the webinar, the weekly webinar. You'll get the invitation to that in a few minutes. Take care.